What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks. When you open a new Webull brokerage account, put any amount of money in that brokerage account. They're going to give you up to 12 free stocks for just trying out their brokerage account. Those 12 free stocks could be worth up to $30,600. So click on that link down in the description box. Open up your new Webull account today. Go get that free stock. Go get that free money. Tuesday, March 21st, and Wednesday, March 22nd, the Federal Reserve will be meeting for the second time this year. And it's a very important meeting because they have to decide between, do they save the banking industry or do they decrease inflation? It's widely expected in this meeting that the Fed was scheduled to increase short-term interest rates by 25 basis points. But with the banking industry on the brink of disaster, with several failed banks over the last several weeks, they're thinking about not increasing short-term interest rates. One of the reasons we've had some bank failures over the last several weeks is because of the Fed aggressively increasing short-term interest rates over the last year. Here's what I think will happen, though. I think the Fed will go ahead and increase interest rates by 25 basis points because in their mind, the banking industry failures of some of the tier 3 banks are not a situation where they believe it will throw the economy into more turmoil. See, if it was a tier 1 bank, right, then the tier 1 banks are too big to fail. So if they had to worry about tier 1 banks failing, then I would agree with some of the economists that they should not increase short-term interest rates. But in our situation right now, that's not the case. The banks that are failing are banks that can fail and our economy won't miss a beat. Yes, there will be some trust lost from some of the American citizens because no one wants to think about their money being in a bank that possibly could close its doors and fail. No one wants to think about that. So there's a trust issue somewhat, but the Fed understands it's not a tier 1 bank. It's not a catastrophic event if a tier 3 bank fails. But what is a catastrophic event is if they do not continue getting inflation down to 2%. Right now, inflation is 6%. Now, it's definitely down from its high water mark back in June of 2022 when it was 9%. Currently 6%. But we need to be at 2%. So we're by no means where we need to be when it comes to inflation. Also, you got to think about if the Fed stops increasing short-term interest rates too fast, inflation could reverse and start going back up again. And we really don't want that to happen. So I think the Fed is stuck between a rock and a hard place. But when you think about the greatest impact to our economy, I don't think it's the banking industry with these tier 3 banks failing. I think it's inflation reversing itself and going back up to 9%, and we're in a world of trouble. So I think the Fed will increase short-term interest rates at their March Fed meeting by 25 basis points. I also think when they meet in May for their third meeting of the year, I think they will also consider continuing to increase short-term interest rates. Now, that may not happen Because by May, if we can have inflation come from 6% in February, and when they get to their May meeting, if inflation is down to 4%, then I think at that point, they stop. The target rate they're trying to get to right now is about 5%. At least that's what the market wants them to stop at. But I've heard some of the Fed committee thinking and talking about getting to 5.50 Fed funds target rate. And if that's the case, that's not priced in, guys. And the market does not want that to happen. And if it does, then yeah, we're going to have more turmoil in the financial markets. It just really is. So really the sweet spot is get the Fed funds target rate to about 5%. And then on the second half of 2023, start reducing it. And if they do that, that gives us a really good chance of really having a strong second half of 2023 from a recovery standpoint. But again, we don't know. We don't know if that will happen. I think right now the Fed is just taking it day by day, because as this data comes in, like the CPI report from earlier this month came in, which was great news. And the reason it was great news is because they could see a really strong decrease in inflation. If you look at January inflation, it was about 6.4%. February's inflation number was 6%. Guys, that was great news for the Fed, right? Because they can see evidence that the rate increases over the last year are working, right? From 9% in June of 2022 to 6% in February of 2023. A lot of good progress. That progress needs to continue on inflation, because in my opinion, inflation is the bigger problem. It's not the banking industry. Don't get me wrong. No one wants to be in a situation where their money is being tied up because some bank can't honor withdrawals. No one wants that. But again, guys, it's not tier one banks. See, tier one banks, like I said earlier, are too big to fail. Tier one banks are Bank of America, Wells Fargo, JP Morgan Chase, Citibank, and US Bank. Those are our 5 big tier one banks. If any of those guys were in a situation where they were in trouble, the government would step in and backstop them anyways, because they're just too big to fail. But these tier 2 banks, tier 3 banks, they're not too big to fail. They will let them fail. So I don't worry about the banking industry. What I really worry about is inflation. If we can't get inflation down, then guess what? We won't have price stability in our economy. And without price stability, a lot of our citizens can't afford the basic things they need to live, guys. So for the Fed, that's the priority over the banking industry. The priority is getting inflation down. So yes, they will increase short-term interest rates by 25 basis points. We won't see any problem in the financial markets when they do that, though, because that's already been priced in by the markets, right? That's already been priced in. So we won't have to worry about any backlash. If the Fed were to do 50 basis points, right, on the 21st or 22nd of March in their meeting, if they decided to do 50 basis points, there would be backlash from the financial markets because it's not priced in. And we'd probably see a sell-off in the stock market. But we won't see that this week, because I don't believe they will go past 25 basis points. I also don't believe they will put a pause and do 0. They're going to do the 25 in my opinion. But I'm curious to know what you guys think. Drop me some comments down in the comment box and let me know if you think the Fed is going to increase rates, given the fact that we've had a couple tier 3 bank failures and the confidence that's out in America right now with our citizens is not real confident. They don't have a real strong trust when it comes to the banking system right now. But I still think the Fed values getting inflation down more than they value saving tier 3 banks. That's just my opinion, but I'm curious to know what you think. If you want those 12 free stocks from Webull, click on that link down in the description box. Open up that new Webull account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you in the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.